Less than a month into 2026, and the global space industry has already seen three failed launches. One of them was India's PSLV C-62 mission, which was carrying 16 Indian and foreign satellites. The failure wiped out most of the payloads on board, and for India's private space startups, the impact was devastating. Hello and welcome to ThePrint. My name is Soumya Pillai and I'm here to explain my story on space insurance gaining attention in the Indian ecosystem. The link to the tech story is in the description, so do check that out as well. Now, unlike national space agencies, private companies don't have the financial cushion to absorb such losses. For a startup, especially in its formative years, losing a satellite isn't just a setback. It can threaten the company's very survival. And in the case of PSLV C-62, none of the satellites built by Indian startups were insured. When the rocket failed, there was no financial fallback. The contrast becomes clear when we look at the only satellite on that mission that was insured, THEOS-2, an Earth observation satellite jointly developed by the UK and Thailand. It was covered against launch risk because satellite insurance is mandatory in the UK. Indian startups, however, operate in a system where insurance is optional, expensive, and still poorly developed. As more private players enter India's space ecosystem and launch schedules become crowded, the question of space insurance is becoming harder to ignore. In established space markets, insurance acts as a safety net that allows companies to recover from failures and continue operations. In India, that safety net is largely missing. Let me first tell you what exactly space insurance covers. Space insurance is typically taken out for specific missions or assets and is divided into three stages: pre-launch, launch, and in orbit. Pre-launch insurance covers a satellite before it ever leaves Earth. This includes damage during transportation to the launch site, storage at spaceports, fueling, and final integration with the launch vehicle. Because this is considered the safest phase of a mission, pre-launch insurance is the least popular option. The next phase is launch insurance, which covers the most critical moment of a mission, from engine ignition and liftoff to stage separation and the satellite's release into its intended orbit. This is when risks are the highest and where most insurance claims historically occur. Finally, in-orbit insurance kicks in once the satellite is operational in space. This covers early in-orbit failure, functionality problems, and long-term technical issues that could affect the satellite's performance over its lifetime. In India's current private space ecosystem, many companies still find it hard to justify these policies. Premiums are high, demand is low, and for countries with weaker currency power and smaller space footprints, insuring space assets often feels financially unrealistic. There's also a growing concern around congestion in low Earth orbit. With massive satellite constellations numbering in the tens of thousands, the risk of collision is increasing. If an Indian satellite were damaged in such an environment, seeking compensation would become a prolonged legal and financial burden, one that a startup may not survive. On the insurance provider side, the options in India remain limited. It was only in 2024 that Tata AIG entered the market with satellite in-orbit third-party liability insurance, covering bodily injury and property damage. The New India Assurance also offers space insurance products, but the overall market remains niche and underused. Industry experts argue that this is not because Indian insurers are overly cautious, but because they are constrained by the lack of a national risk framework and reliable data. India has transitioned from sovereign space missions to private enterprise, but insurance systems haven't evolved at the same pace. Globally, however, space insurance is expanding rapidly. According to the Space Insurance Market Report 2026, the market is expected to grow from about $4.06 billion in 2025 to roughly about $4.43 billion in 2026, driven by a rise in commercial satellite launches. Within India's startup ecosystem, there is a growing belief that the insurance will gain traction once commercial launches become more regular and structured. For that to happen, policies will need to be more flexible and tailored to Indian startups. The failure of PSLV C-62 has underscored a critical gap in India's private space ambitions. If the country wants a resilient space ecosystem, failure must be survivable. Right now, for most startups, it isn't. That was all from me. I'm Soumya Pillai, and you were watching The Print.